Oh, hello everyone, it's Susie again from Esoteric Trading Solutions. I hope you're all well. I hope you're living the life according to the way you want to. Be kind to yourself, be kind to your family and friends, be kind to your animals, and just generally be kind overall and hopefully make this world a better place. Today I'd like to talk about Ripple, the technology, xCurrent and xRapid, and also what it means for the banks and corporates, and also look at valuation for Ripple as well. So this could be a fairly long DVD, fairly long YouTube, I should say. So grab yourself a cup of coffee like I've got, and let's get on with it. So what we've got, excuse me, Ripple is trying to solve a problem, and the problems the banks have is a $24 trillion problem, where Ripple actually have the technology to fix that problem. And that problem, as you know, is they use the SWIFT system for settlement. The SWIFT system is from 1973. It's a very old, clunky system. I've used SWIFT, it's horrible. And basically, when you settle with SWIFT, even normal foreign currency transactions, standard foreign currency transactions, even with, say, Aussie US, one of the most liquid foreign currencies, it's the 5th highest traded foreign currency in the world, even a standard foreign currency deal will take 2 days settlement. If there's a problem with the foreign currency transaction, it will take longer than 2 working days to settle. Also, if it's a foreign currency transaction where it's not a well-known pair, it's not liquid, and it needs to go, say, to Arabia or the Middle East or Saudi Arabia, using the SWIFT system could take up to 10 working days to settle that foreign currency, which is a real problem. With Ripple, it would take literally a couple of seconds. So the problem is, and I'll reiterate this again, the problem is with the banks using SWIFT, they never know when this foreign currency is going to settle. Even though they may do the trade today for T+2, which is generally a standard foreign currency transaction, they have to basically fund for that foreign currency transaction, because they never know whether there's going to be a problem with it. Now, banks will fund or hold funds in their Nostro and Vostro accounts to fund for that transaction, because they don't really know when it's going to settle. Even though it's supposed to settle within 2 days, it may not. But as I said, if it's something a bit more exotic than just Aussie US and something that isn't liquid, or it could be Aussie against the Polish zloty or something like that, a settlement will take longer than the normal 2 days, and also the costs of that settlement will be much more expensive. Plus, you have to use correspondent banks. In other words, I can't just make a payment to the Polish bank if my bank that I deal with doesn't have a bank or a regional bank, or a bank that you walk into in Poland, which means my bank will have to use a correspondent bank that actually holds an account with the Polish bank. So it'll actually take longer. So Ripple's trying to, solve this problem, and they have solved this problem with their own technology, and their technology is so much better than SWIFT. SWIFT is an old, outdated system of confirming trades, and it is a nightmare. So, as I said, banks need to hold large balances in their Nostro account and Vostro account. And their Nostro account is our money, bank me, I'm the bank, bank A. My money is sitting on deposit with another bank, or a Vostro account when your money is sitting on deposit with my bank. So banks have to fund these Nostro and Vostro accounts, because they never know when the foreign currency transaction is going to settle. Now, this is a global banking problem of $24 trillion, massive. Ripple's all targeting this market, but it's also targeting many, many other markets. I've only done a valuation on this market alone, but they are targeting so many more in other markets. So when we talk about the banks having to fund their Nostro and Vostro account because they don't know when the foreign currency is going to settle, they've either got to pay interest to fund that account, or they actually lose interest on the deposit they're actually holding, because they're waiting for this money, this foreign currency, to come through. Also, there'll be borrowing rates, lending rates. They'll also basically, have to, have middle office, basically who sits in between the back office, which is settlement, and the front office, me, who does the deal, the foreign currency deal. Middle office will monitor my limits, my foreign currency limits with the bank that I've dealt with, my trading limits, my settlement limits, my counterparty limits with the bank that I'm dealing with, even my country limits. And me as a front office foreign exchange trader who talks to my client on the other end, I have to monitor those limits. And if I work on front office and I breach any of those limits, I'll have compliance coming down hard on me like a ton of bricks. And if I breach limits more than, say, three or four times, I would literally lose my job. Breaching limits when you're at a front office level is like the worst thing you can do, and you can lose your job. So it's very important that limits aren't breached. But the problem is with foreign currency using the SWIFT system, you never know when the foreign currency is going to settle if there's a problem. And often with foreign currency, there is a problem because the deal doesn't agree with the other bank. I do the deal here, and the other bank doesn't agree with the details of that deal. And then you've got this thing settling rather than within 2 days of the trade that I did today. Within 2 days, it could settle, another 3 or 4 days later. And I have to fund that in my Nostro account. And I also have to fund my exchange settlement account with the Reserve Bank of Australia, which has to stay in credit. And we'll go through that as well. If that doesn't stay in credit 3 times in a row, I can lose my banking license. It's that serious. So Ripple, when we talk about Ripple, Ripple has 2 systems. They have xCurrent and they have xRapid. xCurrent doesn't require any Ripple. xRapid does. They still use the same technology, but xRapid will use the cryptocurrency XRP. There's an article here that you can look at about financial, about middle office, what it is. Middle office generally, as I said, deals with risk people, credit people, counterparty people, compliance, and many, many other people, which is a whole middle layer of banking. If you're a dealer that does the foreign currency deals, you're front office. And if you're doing the settlements, you're basically back office. And back office will do the settlements and put all the deal into the settlement system, like the SWIFT system, to basically, settle that with another bank, and they'll deal with all the confirmations and everything else. Also, middle office will look at monitor cash flows, and they'll look at contingents. And contingents are basically any foreign currency deal that hasn't settled, or even something that's ended up in a suspense account that hasn't been allocated to the correct account in the bank, or even a client's account. So contingents, when a foreign currency deal hasn't settled, is seen as being a contingent, and middle office have to monitor that. Also, I need to monitor it because it's still sucking up my credit limits and my trading limits with that bank. So I need to be aware of that as well, and the systems have to be aware of that as well, even though the money cash flow hasn't settled. And that causes a lot of problems with front office, middle office, and bank office and back office as well. So if we talk about, let's just go through the next slide here. Where is it? It always gives me a bit of a slow thing here. If we talk about the SWIFT system, as I said, it's old and it's clunky. It's really, really bad. Say Westpac, for example, need to pay a client in the US, and they need to pay someone in a US bank. As I said, the liquid currencies are Aussie US, US yen, Euro US, pound US. But, if we're talking about another currency pair like Aussie Thai baht, we'd find that the settlement process would be a lot longer, and there'd be more problem with the settlement process using the SWIFT system, which was developed in 1973. So me as Westpac, I have to buy Aussie dollars and I have to sell US dollars, and I need to fund this trade with money. If I'm going to buy US dollars, where does the money come from? And I have to sell Aussie to convert, basically into US dollars. And so basically my cash balance would reduce by 10 million. T plus 2, my cash balance today would be reducing by 10 million. I have to fund for that. Say the exchange rate's at 0.7. I would buy 7 million US and I would sell 10 million Aussie. Trade being done today, the 16th, for settlement in 2 days' time. In the olden days, it used to be 3 days settlement. Now it's 2 days settlement. You can have a trade settling right on today, but often it puts a lot of pressure on the settlements people. So a standard trade is if I do the transaction today, it'll settle within 2 days. With the SWIFT system, there'll be a SWIFT code, and my settlements people will put that trade into SWIFT with the SWIFT code for the US bank, and a US bank settlements person will need to pick up and confirm that deal and make sure all the details are correct. Otherwise, it cannot settle. Even if it's out by 1 or 2 cents, that transaction will not be able to settle. Now, the problem is once we've done the trade at 0.7, we still have a currency risk for 2 days. The Aussie dollar can go up and it can go down, and we're still revalued for two days, which will affect our P&L at the bank. And that's another issue, currency risk. And also, interest rates and funding costs, which are also monitored by middle office. And, they basically, as I said, we still have a contingent liability to the US bank because that cash flow, the 7 mil that I owe the US bank, hasn't yet settled. It won't settle within 2 days. And this is basically the old SWIFT system. Now, what happens is because that cash flow hasn't settled yet, I have to take that into account with my exchange settlement account with the Reserve Bank of Australia. And also if there's a delay on that settlement, I have to take that into account as well as the price risk. Now, as you can appreciate, banks do, hundreds of thousands of foreign currency trades a day. I think the going rate for foreign currency trades in a day with the banks is something like 6 billion. So if I work at Westpac, I could literally do, say 1 billion foreign currency transactions a day if it's a busy day, or, the Reserve Bank of Australia changes interest rates or something like that. So you can appreciate that you're running price risk, even for a settlement of 2 days, and you're running interest rate risks and everything else, and funding cost risk and credit risk and everything else, which we won't go into. But you can appreciate you're running more risk by having to use a settlement system called SWIFT that doesn't settle straight away. That's the biggest problem, because it also impinges on your exchange settlement account. So basically, the Aussie US will have a buy-sell spread, and this is from the bank's point of view. So say if I was a client and I bought at 77.05, the higher of the two, I could sell at 7,700, and if I had 10 million Aussie, I'd already lose $6,500. And the bid offer spread, and this is a reasonably tight market given it's Aussie US, and given that it's a very well traded currency, one of the highest, the 5th highest traded currency in the world. But if it's smaller deals, less than 10 million, that spread could get widened much further, like, for example, 77 to 78.50, and this is where the banks make most of their money. If you do a small trade with the bank, they will charge you many pips, 150 points or more, and all of a sudden, what you thought you were going to pay, you're going to pay more and more and more. So basically, 2 day settlement, the dealer has to monitor their limits, all sorts of limits, and if they blow their limits, as I said too many times, it's sackable. And this is another thing, FX deals, the last one I saw daily, it was about $6 billion. So always a big issue. So if we go to, say, the effect for non-settlement on my cash flows, say, for example, in a day, I had new money come in of 10 million. So 10 million came in. On my trading desk, I issued 20 mil. So again, I had a running total of 30 million. Say for example, I had money go out early in the morning, but my cash book is still down by 50 million. Essentially, I had a payment for a bond maturity out, and so my running total is 20 million. Because I had a bond maturity maturing, 50 million went out the door, cash in, cash out. 10 came in with a term deposit, 20 million came in with a bank bill, but my running total is still negative 20 million. And then I got a late call from my loans department, the lending department, and they said we need to fund a loan for a building. So all of a sudden it's 2:15 p.m. in the afternoon, and I've got a negative running balance of 50 million. And don't forget, by 4:30 p.m., I need to have a positive credit so that my exchange settlement account with the Reserve Bank is in positive credit. Now, if I don't have a positive credit, I run into big trouble, because I'll have to borrow money from the Reserve Bank, which is very expensive, 25 to 50 basis points over the normal cash rate. Also, they don't like you doing it, and essentially it doesn't look that good for my funds, from my cash in, cash out management, because, as I said before, if you're in debit with the Reserve Bank 3 or 4 times, you can literally lose your banking license. So at 3:15 p.m. I'm still down $50 million, and I need to be positive by 4:30. If the market is tight of cash on the day because the Reserve Bank made their dealing intentions in the morning that they were going to buy securities, so essentially they've sucked money out of the financial market system, cash is tight, I'm ringing up all the other banks saying, have you got any money to lend? And I can't find any money. Then I'd get on the phone, then I'd say to all my salespeople, go and talk to your clients, let's see if we can get some money in on the term deposit side or the NCD side so that we can balance this book. So I get my salespeople to talk to all their clients and say, look, we'll show you a really good rate for, issuing an NCD, say 10 basis points over what we normally issue, or, on a term deposit. Also, coming back to the foreign currency, I also have to keep into account that I've got a $10 million negative, which I have to add to this position because I don't know when this blooming foreign currency is going to settle. It was supposed to settle T+2, but it still hasn't settled, and I have to add that into my cash flow. So this means that my running total as of 3:15 is down 60 million, and I need to bring this into a credit balance before the end of the day, and I need to find that money somewhere and pronto. And the thing is, the exchange settlement account will sit within Austraclear, Exigo, which again is an old settlement system, and will also affect SWIFT and everything else. So essentially, I need to try and find $60 million from 3:15 to 4:45 p.m. When the system Exigo Austraclear will close for the day, and that also will impinge on my exchange settlement account with the Reserve Bank. And you can appreciate if you've got a lot of foreign exchange transactions which you don't know when they're going to settle, and they're a negative to you, the money going out, then this balance is going to be worse than ever. So I need to get my salespeople, my sales client traders to get some money in, and get some money in fast. So I need, more than $60 million to bring this back to a credit balance. That's the biggest issue the banks have. Now, what banks normally do, they will hold surplus funds in the exchange settlement account, so they're not in this position. And the problem with holding surplus funds in the exchange settlement account is they get a lower interest rate than anywhere else. So they might get, say, the cash rate's, 1.5%. Holding the money with the Reserve Bank of Australia overnight, they might be lucky to get 0.75. So there is an opportunity cost of holding large balances in the exchange settlement account with the Reserve Bank, because they show you a much lower interest rate and you're not getting the right return on your assets. So that's another big problem with the settlement issue when you're using SWIFT. So as I said, I need to get this in credit balance fast, and I need to do it pronto. And foreign currency trades that don't settle on time cause me a lot of drama, being a front office trader that needs to balance the book for the exchange settlement account that we manage with the Reserve Bank of Australia. Now, if we use Ripple, we don't have that problem. So no problem whatsoever. So basically, as I said, this foreign currency trade, I'm negative 10 and I bought $7 million, which I want to settle within 2 days, and that negative 10 will affect my exchange settlement account with the Reserve Bank of Australia, and basically I need to find another 10 to balance that. And also the 7 mil that the US bank gets, they would hold an account, a similar account with the Federal Reserve, where they would have to balance their book as well by the end of the day. So going to Ripple, Ripple avoids all this problem. If we use Ripple's technology, and we only use xCurrent, we just use their technology alone, excuse me, I'm thirsty, with no Ripple XRP, with no XRP, and we do a foreign currency deal, Aussie US, the banks can message each other. Sorry, there's a spelling error there. Never check this for spelling errors. The banks can message each other instantly on blockchain. There's no delay, not like Swift, where, you know, it's delayed and you've got to make sure people are on there at the different time zones and all that sort of thing. The banks can message each other in real time instantly, and there is no delay. Also, they can do real-time settlement instantly. Through the interledger protocol, which means between books and accounts, between the book of my bank, say being Westbank, and the US bank. I can do an transaction between my book and the US book. So Ripple has this protocol called Interledger Protocol, ILP, under the xCurrent system, which is their technology. It doesn't use Ripple XRP. This protocol is a decentralized payment protocol that provides payments to different asset ledgers. So to make that easy to understand, just think about it simply. I have a book that I manage, being an Australian front office dealer, and the US bank, the trader on the front office desk, also has a book they have to manage, and we both have the same situation. We have to make sure our book is square at the end of the day. In other words, the inflows equal the outflows, and we have a credit balance, not quite square, but we have a credit balance so that my exchange settlement account with the Reserve Bank is in credit, which means it has money in it, doesn't have a negative or a deficit. And the US person, front office person, also will have an account sitting with the Federal Reserve where they also have a credit balance. So using the interledger protocol between my book and the US guy's book or the US girl's book, I can make a payment instantly using Ripple technology. And I don't have this settlement problem of T+2 with foreign currency, because the foreign currency will settle instantly. And thus, I don't have the problem with my book being negative 10 and it going through to my exchange settlement account, where I have to find money to fund that account with the Reserve Bank. And because I don't know when that's going to settle through with Swift, you know, I could be holding a deposit for days on end, getting a very low interest rate from the Reserve Bank. And then you can imagine if you have volume in foreign currency, you don't know when it's going to really settle because there's problems with the SWIFT system. It doesn't match up. The trade will not go through, it won't go through between the two banks, one bank in Australia and one bank in America. So what Ripple has is they connect with the sender and the receiver, and a system, as I said, it's the interledger protocol system, and this system will connect with the sender, who I'm the sender, and they'll connect with the US bank, which is the receiver, and the payment protocol is set up, and they'll connect to the destination ledger, which sets up and attaches its own Ripple consensus ledger. So it's almost like a plug-in ledger to the receiver, where the receiver basically, once they acknowledge that a message has come through via blockchain, the receiver literally acknowledges that and can open up this packet protocol for the release of the funds, which will go to the US bank account, being the receiver. Those funds will get released under a protocol, a particular protocol, and cryptographic conditions and an expiry date. So, for example, those funds will get released when there is certainty that the transaction, has the right rate, has the right amount. It's been authorized with cryptographic signatures, and certain conditions that are set up within the Ripple Consensus Ledger protocol or rules are adhered to, and and it's done with the expiry date, say T+2, for example. It's done straight away, just T0, I should say. I'm getting myself muddled up. So essentially what will happen is Ripple's technology will use an interface with the receiver's technology, and they can basically interface their system to the destination system by basically attaching a payment setup protocol and simply attaching their consensus ledger to the receiver's system. And that's the beauty of Ripple. And then the receiver can get those funds instantly, and I can have those funds sent out instantly, and I don't have this problem of not knowing when that foreign currency trade is going to settle, and because it's done instantly. And I don't have the problem with managing my exchange settlement account, or the problem with my limits or my trading limits or my counterparty limits with the bank in America. So what will happen is the transfer will get transferred, has to be authorized, all the funds are available, the rules and policies have to be satisfied, the transfer is prepared, and conditions are fulfilled, and then it is executed. So the ledger will use an escrow funds where liquidity is provided, and it will only be released with a set of conditions that are met, i.e., for example, crypto signatures, etc. And this is a secure transfer between the ledgers. Think of the ledgers being one account in Australia and one account in the US. And basically, there will be a connection between those two ledgers. So basically, the two ledgers will connect, they'll talk to each other, and that transaction will be done instantaneously. And there'll be instantaneous settlement within 1 to 2 seconds. And because that technology creates instant settlement, we don't have the problem of all the middle office functions, all the middle office people monitoring all my limits and everything else, and me having the problem that I have to fund my foreign currency that I had to buy, US dollars, and I had to sell Aussie. I have to fund that, and I have to fund it to keep my exchange settlement account in balance, because it's created a negative 10 million. And think about it, foreign currency, it could be a lot more than that. I could have, hundreds of millions that I've got to try and fund for, and I don't know when it's going to settle if I was using SWIFT. But with Ripple, I know that it's going to settle instantly. So if you go to xCurrent, and this is probably the easiest way I can explain this. I'm not a tech guru, but basically the interledger protocol between ledgers. This is me, the bank, the Westpac, and this is the US bank, for example. It'll go through the interledger protocol. There'll be a plugin which will get connected. This plugin will get added to the message that the receiver actually receives, and that plugin will enable them, I suppose it's like a channel, will enable them to receive the 7 million USD within 2 to 3 seconds. Which is incredible technology as far as I'm concerned. Absolutely incredible. It works. I've tried, I've sent foreign currency through Ripple. I've, done all sorts of things, and it works within seconds. Absolutely brilliant. And it sure isn't a scam, that's for sure. People are just stupid if they think that. So that's done instantly. So if we go to the next slide. Now, what does that mean for the banks or the corporates that use Ripple? If they use Ripple's technology for xCurrent only, and they don't use the cryptocurrency of XRP, the banks or the corporate will save between 30 to 40% because the foreign currency is settling instantly. There is no opportunity cost of having to fund for that foreign currency that you don't know when it's going to settle. That is the biggest problem. And you don't have to hold huge balances in your Nostro and Vostro accounts because you don't know when the foreign currency is going to settle. And that is the $24 trillion problem that Ripple can fix. Banks around the world, have to hold 24 trillion in liquid funds because they never know when the foreign currency is going to settle, because SWIFT is an old system and there are lots of problems, and if the two banks don't agree the foreign currency deal, it cannot settle, and it could take even longer to settle if it's through a correspondent bank, which means not only is there two banks involved, it could be 3, 4 or 5, and every time it goes through another bank, it's costing me the bank sitting in Westpac, more and more money. So if I'm a bank and I use SWIFT, the old settlement system, and say my revenue was 120 mil, my cost was 60, and my profit was 60 million for the year, and I decide, as the bank in Westpac, I decide to only use Ripple's interledger protocol for instant settlement. I'm still using my FX, but I'm using the interledger process to have my FX settle instantly. As a bank, I can save 30 to 40%. So say I save 35% of my costs. My revenue is still 120, but all of a sudden my costs have gone down to 39 mil, and now my new profit is 81 mil compared to the original 60 mil profit. Now, if I'm a bank and suddenly my costs have gone down to 39 million from 60 million, and my profit has gone up from 60 mil to 81 million, what does that mean? Now think about it. It means as a bank, we have more profit, we have more money because our costs are less. We can be more competitive to our client base and to other people's client bases, or banks or corporates' client bases, or Visa, and we can reduce all our rates on everything to get more clients through the door. So as a bank, because I have this comparative advantage of using Ripple's ILP system rather than the stupid old SWIFT system, I'm going to save myself as a bank 35%. This puts me in a very good strategic position to go out, to advertise everywhere, that we can show personal loans rather than the old way, 15%, because we're using the SWIFT system. Rather than charging clients 15%, we can now show a personal loan at 8%. Every other bank that uses the SWIFT system still has this same profitability structure. They don't reduce their cost by that. So all of a sudden, me as a bank, I can show every client out there for personal loans 8% when the going market rate is 15%. What are you going to do as a client? Are you going to stay with the old bank that still uses the SWIFT system that's charging 15% for a personal loan, or are you going to go with the bank that uses Ripple to basically which reduces its costs, and they're only charging a personal loan of 8%? Say this is Westpac, and this is NAB who's using the old system of SWIFT. Westpac would get so many clients from NAB, it wouldn't be funny, and they'd get more and more clients. So the reality is, anyone that uses Ripple's interledger protocol and they save themselves 35% just on costs, it's increasing their bottom line from, say, in this example, 60 mil to 81 million, which means they have more money to be more competitive on all the other products they have as a bank, and they can reduce the interest rates they charge clients, thus getting more other banks' clients. And that, clients are gold, clients are everything. So it puts the bank that's using Ripple interledger protocol in a very competitive advantage. I mean, the reality is banks cannot afford not to use Ripple. Because if you're competing with a bank that is using Ripple and you're still using Swift, you're going to be dead in the water. Absolutely, because you'll lose all your client base. It is just a given. There is no doubt in my mind about that. And that's what the banks and every other corporate is facing at the moment if they don't use Ripple's xCurrent. And we're not even talking about XRP, the cryptocurrency, okay? Right, so let's go to the next slide. Ripple's game strategy at the moment, I know people complain because, they're not using XRP through xRapid, but Ripple's game plan at the moment is to get as many banks and as many corporates to use the technology first, okay? It's just a given. So they get used to the technology of Ripple and they understand it. If the banks, as I said, use the technology of Ripple first with xCurrent, they save anything from 30 to 40%. That's number one. If they decide, right, we're really happy with xCurrent, we're now going to use xRapid, and there are a number of clients of Ripple's that are now using xRapid, and it's getting bigger and bigger, and it will continue to get bigger and bigger. That means if they use xRapid in their FX transactions, they will save another 30%. So the bank's all-up savings would be now 60% or 65%. So if a Canadian bank, for example, let's go through this, decides they need to sell Canadian dollars because they have to pay US dollars to a US dollar bank. So the transaction the Canadian bank has to do is buy US dollars. Me as the front office dealer in the Canadian bank, I have to buy US dollars and sell Canadian dollars. Because I use xCurrent, that will be instant. But if I use xRapid, so I use the technology and I use XRP for the transfer, my costs reduce again with another 30%. And also using XRP, the overall cost is only that, which is not even a tenth of a basis point. So what happens is the Canadian bank, via the Ripple system, which is ILP, plus XRP, which is the xRapid system, will do the following within Ripple's xRapid system. They will put in what they want to do. They want to buy US dollars and they want to sell Canadian dollars. Ripple will do this transaction on behalf of the Canadian bank. Any Ripple fluctuations up or down, Ripple will cover. And what Ripple will do is they will buy Ripple, sell Canadian, and they will buy Ripple, sell Canadian, and they will buy US dollars and sell Ripple. So effectively, you've got these two transactions, okay? So what happens in this situation, the Ripple contras out, see this here, buy and sell, they contra out, and the overall deal is still buying US and selling Canadian dollars. They contra out, and Ripple then transfers that within the inter-ledger protocol to the US bank instantly. So what the US bank will see is the US dollars. The Canadian bank will tell Ripple what they need, and Ripple will do the transaction on behalf of the Canadian bank. And they'll do it within their system, which provides liquidity, and Ripple would obviously do it, with their own system or target exchanges to do it, whatever they do, wherever they get their funding from, within their ILP, within the xCurrent, xRapid system. So, in other words, they're using, obviously, the technology, which is xCurrent, but then they're using Ripple, the currency, XRP, to become, and this all becomes xRapid. So, as I said again, Ripple will do this on behalf of the bank, Canadian bank. They'll buy XRP, sell Canadian dollars. They will buy US dollars and sell XP. This will contra, and the buy US dollars will go straight to the US bank through the Ripple ledger, or between the ledgers or the books protocol. And again, it'll be subject to all the risk metrics and the protocol and the rules that Ripple have set up within the system. And that is done instantly. And as I said before, the bank using Ripple will save an additional 30%. So if we go now to our profit and loss situation, where the bank uses xRapid, our initial situation, we had the bank only making 60 mil profit because it was using Swift. If it used xCurrent, the bank made 81 mil from 60 million. Still put it in a good position to get more clients. But using Ripple also adds another 30% because you're not paying spreads, interest rate differentials, credit, and you're settling instantly as well. But also you're not paying the spreads on double foreign currency and also credit spreads and the like. So using xRapid, all of a sudden, say my revenue is still 120 million, all of a sudden my costs overall have reduced to 27 mil. So originally my costs using Swift was 60 mil. Using xCurrent, my costs are now 30 mil. And now using the technology of Ripple plus XRP, my costs are reduced to 27 mil. I mean, this is just an example, so you get the idea. So all of a sudden my costs overall have reduced by 60 to 65%. Thus, the bank's net profit is 93 million from the using Swift of 60 mil to using xCurrent of 81 mil to 93 million. So with my profits now of 93 million rather than 60 or rather than 81 million, that puts me in a much more competitive advantage as a bank to go out there and to market to new clients, because I can show them the bank's products at better interest rates because I'm actually saving on my cost line. And it puts me in a very competitive advantage as the bank, the Australian bank, say it's Westpac, to get ANZ's clients, to get NAB's clients, to get CBA clients, if they are not, number one, using Ripple's xCurrent, or number two, if they're not using xRapid. You see what I'm saying? So any bank or any company that uses the old settlement systems cannot afford not to use Ripple, because they will literally lose their client base. Clients will search for the cheapest option and they'll go with the cheapest bank. Particularly on the personal loan side or the mortgage loan side, they will find the cheapest bank. Also, even on the deposit side, because my costs are reduced and I'm Westpac, and I know the other banks are only showing, say, 2% on deposit, I can, try and get more clients in by saying, right, we'll show you 3% on the deposit side. And on the lending side, we'll go from 50% personal loan down to 8%. So the other banks that don't use Ripple's technology are dead in the water, and corporates that don't use Ripple's technology. Sorry, this is going too long. I'm really, really sorry about this. So it's 43 minutes. My apologies. So valuation. What we've got now, if we value Ripple, and I want to talk about how Ripple make their money. The banks or the corporates get charged for software, they get charged for implementation, and they also get charged for ongoing maintenance if there's maintenance to be required. And obviously if they were going to use xRapid, there'd be a cost to using xRapid as well with the XRP. So this explains why Ripple have $25 billion in the bank. And they can invest in other startups and make sure those startups use Ripple's xRapid, which includes XRP. Ripple has a lot of money because they sell their software, their technology, to the banks. They implement it and they, help manage it and control it. And obviously they do all the processing on behalf of the banks. So that is why Ripple has cash in the tin of 25 billion, which is a lot of money, a huge amount of money. So in a sophisticated market, the cryptocurrency market at the moment is not sophisticated. It's, there's a lot of retail element in it that has no idea about valuation and has no idea about the value of what XRP should be because they're focusing on the wrong things. In a sophisticated market, when you have institutional clients will do a valuation on a stock, they'll do a valuation on a bond, they'll do a valuation on even a property, looking at annuity cash flows, out for 10 years, out for 2, out for 3, and generally they'll use different valuation models. Most of the institutional market will use the net present value model or the discounted cash flow model, which is pretty much the same. And they'll use it over a zero curve, a bootstrap curve, and they'll use it with real interest rates, credit spreads, all sorts of things, assumptions within the model, whatnot, to come up with a valuation of where the stock should be, or where the property value should be, or where the crypto should be, or where the bond should be. So basically, the net present value or discounted cash flow value is a measurement of profit of the present value of the cash inflows and the outflows over a period of time. And these generally are used to value stocks, bonds, etc. So going back to Ripple is trying to solve a $24 trillion problem. Right, so if we say, and we use some assumptions, some very basic assumptions, that Ripple only captures, say, 10% of the banking market or the corporate market, only 10%. So there's only a 10% take-up of their technology. Now, that's a very, very conservative number. I purposely made it very conservative. Only 10% of a $24 trillion problem. They only get 10% of banks and corporates globally to pick up their technology, and not even talking about xRapid, but xCurrent. My valuation says the present value should be around 12.499 trillion. If we look at it for, and this is over a year, if we look at it for 2 years, I come up with a valuation of 33.447 trillion in terms of net cash flows, the present value of that money coming to Ripple. So if we look at this just very quickly, oh crikey, this is going really long, I'm really sorry. If we look at this, using interest rates, I'm looking at the US curve and adding a few bid offer spreads and this sort of thing. And I'm saying there's only a 10% markup, 10% take up. I'm saying for year one, the net present value of those cash flows is 12.49 trillion. If there's only a 10% take up on the 24 trillion, and if it goes out for 2 years, it's around 33.447 trillion. So if we basically have the assumptions in our simple model of net present value, where the present value of the future cash flows are brought back to present value over the interest rate curve as well as the credit curve, and we only assume there's a 10% take-up of Ripple's technology using xCurrent, we basically am assuming that we will get the Ripple's net present value with 12.4 trillion and 33.4 trillion worth. If we then look at what's on issue in terms of Ripple, and we make these following assumptions, Ripple has 100 billion cryptocurrency coins on issue. We assume for simplicity that they don't burn those coins, okay, even though we know they do. We know that Ripple will burn their coins, and the burn rate as time goes on, because the usage will be more, will probably get higher and higher. But just for simplicity, I've made the following assumptions. That essentially the burn, there's no burn rate. We're using the total issuance rather than the circulating issuance of 100 bill, and also essentially I've only assumed a 10% take up of their xCurrent, and I've used the interest rate swap curve, the US interest rate swap curve, which the banks use as their cost of funding curve, which has an implied credit rating of AA. So if a bank has a credit rating less than AA, then that swap curve should be higher. There should be margin in that. But for simplicity, I've just used a AA swap rate curve and haven't really added too much margin in that for the cost of credit. Because, Ripple may not have a AA credit rating. It may have something less than that. So if we assume that the net present value of their cash flows is 12.49 trillion over 100 bill, I'm actually saying in the first year, one XRP should be $124 or $125. If we assume that the cash flows with a very simple valuation model using the discounted cash flow or the net present value is 33.4 trillion over 2 years, then 34 trillion over 100 bill puts one XRP at 334. And again, if we do the same over a 3-year period, we're looking at $892. So, and this is assuming only that xCurrent is taken up, and only 10% of xCurrent is taken up globally. And I believe more will be taken up absolutely. So that's sort of the valuation I'm looking at. And don't forget, Bitcoin took forever to move from 80 cents to, to $1 to 2,000, whatever. It took a long time. Bitcoin, as you know, came out in 2008, and it didn't really get traction until probably about 2016. So it took at least 8 years. Now I believe Ripple will get traction much quicker, and XRP will get very fast traction once the take-up of xCurrent becomes more and more. Even just the take-up of xCurrent will put Ripple in a valuation of that level, as I've said. If they use XRP, then those valuations that I've assumed or done are going to be higher. XRP per one XRP is going to be higher than that. Another thing, if xRapid is going to be used, then that will be higher. If corporates and banks start using Ripple and start holding it, they'll hold it, and that will be higher, which reduces the circulating amount and hoards Ripple, which will push Ripple up higher. If the burn rate starts burning the supply quicker than we anticipate, that reduces supply and the price of Ripple will rise. If the exchanges start holding Ripple due to incredibly large volumes and they don't want to be subjected to price increases, then they will also hold Ripple and the recirculating volume will reduce. If more xCurrent is taken up, Ripple's revenue will increase, and in a sophisticated market, that should increase XRP. The problem is at the moment the cryptocurrency market has many amateurs in it and many retail amateurs that have no idea about sophisticated markets and valuations, and Ripple is not reflecting its true costs. And also there's no regulation. And without regulation, the big wholesale fund managers that really know how to value things can't come in. Also, if more crypto funds use XRP for revaluation and also, for instance, settlement within their funds, they need to hold Ripple, thus the value will go up, and obviously the price of Ripple will go up because they're holding more Ripple, thus reducing the circulating amount. If the take-up rate of xCurrent is higher than 10%, which is very low, that will also increase the value of XRP in a sophisticated market. If xRapid, if the clients start going from xCurrent to xRapid, which is what I expect in the next year or two, or even in the next 6 months, that will also increase XRP's price. And as I said, if you look at the technology of Bitcoin, it is old technology, old technology. It could take up to 48 hours to settle because of the miners issue. If the miners have got something else to do or getting paid somewhere else or whatever, then Bitcoin may not even basically transact. Ripple's technology kills it. So overall, be patient. This is my belief. Please do your own due diligence, but my belief is Ripple as a cryptocurrency is dramatically underpriced, and I'm a holder for at least 2 to 3, 4 years even. Thank you. I don't know how long it'll take, but that's my belief. Please do your own due diligence. Again, this is just for me. I've got the disclaimer here, the waiver, but I believe it is dramatically underpriced, and we should see it. I'm answering your questions in terms of valuation, at least 200 to 350. That's my view in the next couple of years. Thank you for listening. I didn't mean this to be so long. 55 minutes is really long. Please be happy. Please look after yourself. Be kind to everyone. Be kind to the world, and just make it a better place. Thank you.